your presentation focused today on what type of questions to ask when you're investing in a mining company. Give us a few of your points. Give us a few of your questions.
Well, there's sort of a top list of questions you need to answer to figure out if something is investable. It starts with the commodity. Are you in a commodity that's in a market today? The reality is commodities are cyclical, and not just the entire commodity market, but like sort of base metals are high or gold is high or down, but even within base metals and precious metals, there are little cycles, and you have to get the timing right. The way to get around that is to go for the cost curve. It's to try to find the deposits that are economic regardless of where the commodity cycle's at. In a really bull market, it doesn't matter if they're in the bottom half of the cost curve, but the bottom quartile of the cost curve is where you really want to be, because those are the ones that'll make the best profits no matter where commodities go. It doesn't really matter what grade they are, it matters where they are on the cost curve and how much money they can make regardless of where the commodity cycle goes.
Our investors are largely looking at small cap mining stocks, obviously, of which there are a multitude. How do you discern then how do you pick the winners?
It's what I do for a living.
Right.
I'm a small cap investor. I invest in small cap mining stocks, and it's never easy. You need to ask all the questions, and I think that one of the mistakes small cap investors can make is they'll jump on a bandwagon and say, well, gold is hot right now. The reality is a mining company needs to stack up in every way. I kind of make it, I have this table analogy. So a table can stand on 4 legs,
right,
and it can stand on 3 legs, but it can't stand on 2 legs. And the 4 legs of a small cap mining company, in my mind, it needs an economic deposit. Reasonable. It could be 1 million ounces, it could be 5 million ounces, but it has to have a deposit that's economically mineable. It also needs really good management. And the reality is the best deposit in the world without experienced management is very unlikely to come to commercial success and fruition. The third leg for me is financeability. A junior mining company usually comes back to the market once a year until it gets into production. And that means that you need to consider its ability to raise money and the rate at which it can raise money. That ability to finance itself is essential to the success of a junior mining company. And the last one, believe it or not, has nothing to do with mining at all. It has to do with promotion. The reality is companies are public, and they need to have a public persona, and they need to appeal to the public. And there's a million ways to both appeal and not appeal to the public. You need to be in a commodity that's reasonably popular at the time. You need to have a CEO that can really explain in tangible terms how he's going to create value for investors. He needs to be out there and talking about his story. It's not enough to just go back to your site and get really good drill results. Those drill results need to be published and put into the public domain in a way that's acceptable to the public so that they'll continue to invest in you and back your company. It's very rare that a small company has all of those things. If they do, they're probably doing wonderfully. If they have 3 of them, then I think maybe I can wait for them to get the 4th, and I'll make a lot more money when they get it. If that makes sense.
Yeah, that's great advice, Amanda. What are you looking at now? What kind of commodities are you looking at the moment?
I think there's a lot of value right now in gold stocks, and junior gold stocks have been completely beaten up in the last 6 months or so. And I think there's some really, really good value. So you can do some really great stock picking if you've got a little bit of patience and you're willing to, and things that were massively overpriced before, great companies but fully valued, can now be picked up for a reasonable amount of money. On the other hand, battery metals, well, they're hot.
Yeah.
There's no other word for it. They are just hot. And
too hot, or is now a good time?
Once again, you need to pick your spots. You need to find economic deposits. There's too many lithium companies out there, and they are not all going into production, and they are not all going to make money. But there's a few great ones, and I think if you go back to basics and fundamentals and ignore the hype and try to find the guys who actually have a deposit of enough scale and enough size and that have some kind of economics attached to them, so you know they could actually turn into a mine one day, those are the ones that are going to survive.
We're talking about value in junior gold miners. Do you have a favorite?
One of the most beaten up stocks that I know right now is Asenco. Asenco is a great little mine, and they have had the worst run, and they've been in the news, and they've been shorted. But the actual mine is great value. They are producing ounces and producing profits on a daily basis. And I truly believe that when the market realizes that all of this angry hype about them is overdone, they will re-rate to be a wonderful buy again.
Asenco. Thanks so much, Amanda. Appreciate it.